morning to all. I'll make a quick
Bom
introduction
dia.
to Portuguese and soon switch to English. Bom dia a todos.
Good morning, everyone. It's a great pleasure for us to start this week's webinar on
Real
Real Digital, this series of webinar that has the objective of debating with the society the general guidelines for Real Digital in Brazil, in addition to raising case studies that can benefit from Real Digital and the most adequate technologies for its implementation. The previous editions are already available on our YouTube channel. Our focus today is on cross-border payment systems and how this system can help us improve the system. Among the discussion, we have the issues of raising the requisites and necessary strategies for Real Digital that allows for its integration with international payment systems. For the roundtable today, our speakers are foreigners. Therefore, the event will continue in English with Portuguese simultaneous interpretation into Portuguese. You can choose the language you listen to. And for those who want to send us questions, you can send to the email real.digital@bcb.gov.br.
Welcome to the 6th Central Bank of Brazil's Digital Real webinars. In this roundtable, we'll focus on international integration through cross-border payment solutions, especially CBDCs. Traditional cross-border payment systems around the world are highly inefficient. Payments can take very long to conclude, costs are high, the whole process is opaque to the end user, and access is not easy. I have the honor to be joined today by 3 experts that have been leading groundbreaking projects in this field of cross-border payments. Each one of them will have 5 minutes to share with us their initial considerations, and then we'll jump to questions. If you'd like to pose a question to our panelists, please send it to our email address, rio.digital@bcb.gov.br. I'll first introduce our panelists. We are pleased to be joined by Claudine Herman. She is the Director of Financial Infrastructures, Innovation and Payments in the Directorate General of Financial Stability and Operations of the Banque de France. Claudine has over 25 years of experience working for the French Central Bank, with a background in the private sector. At the French Prudential and Resolution Authority, she was in charge of the supervision of foreign banks. Before joining the Banque de France, Claudine worked in the field of auditing in the banking and finance sector in the UK and in France. We're also joined by Andrew McCormack. He joined the BIS in April 2020 as the center head of the Singapore Innovation Hub. Prior to the BIS, Andrew was Chief Information Officer and VP Payment at Payments, where he was responsible for technology strategy and payment system operations. Under his leadership, Payments Canada embraced cloud technology, launched API services, and led the groundbreaking blockchain research, aka Project Jasper, alongside the Bank of Canada. We're also joined by Naveen Mallela. He's based in Singapore and currently leads coin systems globally for Onyx JP Morgan. As part of the role, Naveen is responsible for launching a new product line for wholesale payments based on digital currencies, extending his work on JP Morgan Coin, for which he was the chief designer and product lead. Prior to that, Naveen was leading the digital function for wholesale payments in Asia Pacific. Naveen led Project Ubin across all the phases from a JP Morgan standpoint with the Monetary Authority of Singapore, which was an industry effort to use a distributed ledger technology for the clearing and settlement of payments and securities. And before joining JP Morgan, his work involved technology strategy and transformation for a global consulting firm with coverage across Japan, UK, and Singapore. Thanks, Claudine, Andrew, and Naveen for joining me here. I'll give a quick background on our interest. Brazil's interest in cross-border payment system might be a little different from other developing countries. Inflows from remittances and international tourism account for a very small share of the international flow of funds to Brazil. So our main cross-border financial connections are related to trade. We are a resource-rich country and a major commodity exporter, and to foreign investment in the country. So given this backdrop, we'd like each of you to comment on the projects you've been involved with in this cross-border payments agenda, highlighting the most important lessons and the main obstacles you faced so far. We'd like to start with Claudine. Claudine, please, the floor is yours. I'll share your presentation.
Thanks a lot, Fabian, and thanks to the whole team at the Central Bank of Brazil. It's really a pleasure to be here with you and with Andrew as well as Naveen. Yes, maybe I can share with you a few thoughts drawing from our experiments. Actually, it's been quite an exciting week for Banque de France. As you may know, we published earlier this week our report on the lessons learned from our wholesale central bank digital currency experiments, which really draws upon these experimentations and the first conclusions that we may draw. So I'm really happy to share this with you. Maybe just if we go to the following page, maybe just to share with you the rationale behind these experimentations. Indeed, the main theme was to ponder and to see what kind of role central bank money could play in a tokenized financial world, since we have seen many changes. Really, the main theme is to how we can ensure that the settlement occurs in central bank money in a tokenized world and using tokenized financial instruments. Of course, if we have these tokenized financial instruments, we ask ourselves the question as how we can tokenize the cash leg to settle the transactions, bearing in mind that central bank money is indeed the safest, the most secure settlement assets, and that we need to ensure that it can go on in this new world. Also, the main purpose being and main concern being the risk of liquidity or fragmentation. If various zones develop with other settlement assets, like, for example, like crypto assets, there is a danger that market fragmentation occurs. So the question of anchoring the system in central bank money is really central to this, to ensure that we have a unifying role. And thirdly, the topic and the concern is also about accompanying innovation and using new technologies like DLTs, and also to identify any possible risks that stem from these technologies and how we can ensure programmability, especially for a central bank. So if we move to the following page, the approach that was taken by Banque de France was really an approach of learning by doing. This is why we launched quite an extensive program, which is still in progress, and which spans quite a long period. It started in March 2020, where we called for interest for participants to work with us on these experiments, and we had actually over 40 responses from interested parties, which we selected on the basis of innovations that could be brought, and also focusing on the use cases, primarily using cross-border and cross-currency themes, which we deem to be the most interesting. Also, we were quite agnostic on the use of technologies, and this is why we use both, for example, private and public blockchain, which we adapted with our partners. And the main goal being that whatever the options that were chosen, the essence was that we would keep control over the central bank money and no outsourcing at all. So these were really the main aspects that we wanted to use in this experimentation program. And now you will see on the next slide that this program was actually quite extensive. So also happy to have some of our partners also on this panel. So as you see, there have been 9 experiments. 2 of them are still ongoing, and various use cases, both on the securities, both listed and unlisted, cross-border settlement, PVP, various technologies used, and first lessons to be learned. Also, we used some DLTs, and we also used our legacy systems because we are quite interested in seeing how interoperability can work using both DLTs and our FMIs. So the diversity of use cases and a number of lessons that I will quickly go through on the next page. So so we eventually we found that efficiency can be actually achieved through these new technologies. I will go over them later on with the questions, but still a long way to go because this experimentation program is not finished, and there are new areas to be still explored. Notably in the context of the decentralized finance, using also more cross-currency experiments, testing scalability on the blockchains, testing and challenging security and performances, and as I mentioned before, working further on interoperability between legacy and new technologies, and also between DLTs themselves. So both on a business and technical perspective, quite some work still to be done. So this was like a kind of introduction. So if you want to see our report, you can have a look at it. It's on the internet. Thank you.
Thank you, Claudine. So I would now like to hear from Andrew. Andrew, could you please share with us your thoughts?
Absolutely. Can you hear me okay, Fabia?
Yeah, sure.
Okay, great. So thank you again for the opportunity. It's a great honor to be able to speak this evening in Singapore, this morning in Brazil. Maybe I'll briefly introduce the BIS Innovation Hub. The Innovation Hub was established in 2019. It's the newest division within the Bank for International Settlements, and we have somewhat a unique mandate within the bank itself. A threefold mandate: one, to identify critical trends applicable to central banking in the technology space; two, to develop public goods, so technology solutions of relevance to our community that could impact the functioning of the global financial system; and three, as the BIS usually does, to serve as a convener or a focal point for innovation within the central banking world. So in practice, what that actually means is we're actually quite action-oriented. We really strive to build software that ultimately might take on a life of its own as either maybe a new service for the BIS would offer back to central banks, or potentially even open sourcing certain solutions that we build back to the community, or even more broadly. We currently have 5 centers around the world in Stockholm, London, Hong Kong, Switzerland, and Singapore, where I'm talking to you from today. And we are working on a portfolio of projects across a whole bunch of themes, but CBDC features very, very prominently, and payments, cross-border payments in particular, feature very prominently in our work program. We have projects in the retail CDBC space, the wholesale CDBC space, delivery versus payment of tokenized assets. We've been involved in Banque de France's Jura project through our Swiss center. We've got a project on netting algorithms for DLT and tokenized assets, in blockchain networks, and of course multi-currency CBDCs, which are very near and dear to my heart, and certainly something we're working actively on here in Singapore with our work on Project Dunbar. So, briefly, cross-border payments have been, very much a priority for the BIS for many years, and as you probably are aware, the Financial Stability Board and the CPMI have been working for a few years now to really focus on how to make cross-border payments faster, cheaper, more efficient. And a lot of the work we do in the Innovation Hub is directly aligned with that mission, so to speak. We were really undeniably focused on the fact that the payments in the future will be increasingly connected, increasingly real time, And really what we want to do is come up with solutions that allow users of all types, individuals, corporates, commercial entities, to transact across various accounts and digital wallets in multiple currencies, domestically or across borders. And so DLT platforms, as I've mentioned, do play a role, we believe, in the future state, because we do need an always-on multi-currency platform for high-value international trade and settlements in central bank money, right? And I'm from Canada, and I think we have a lot in common with Brazil in the fact that Canada is also a resource-rich country that does a tremendous amount of export, with the United States and more broadly around the world. So I do think that the kind of perspective that Brazil has on this issue is also very probably similar to what Canada is also thinking about in terms of cross-border trade, for sure. So again, our work on Project Dunbar more recently is really focused on kind of the notion of, is it possible to build a multilateral platform that would allow central banks to come together and issue wholesale CDBCs for the purposes of cross-border trade onto a common platform? And there's a whole lot of challenges with trying to do that. It's not traditionally how payment systems evolve, and so we are kind of bravely going into that work, and we've started to publish a lot more content from that work program. But we've been working with most recently with Australia, Malaysia, Singapore, and South Africa, bringing together all these partners who individually have actually done quite a lot of work in this space. Obviously, Singapore with Project Ubin for the past 5 years, and Naveen can talk about that. The South Africans, Project Coca, has been ongoing for many years, and they've got a tremendous program in terms of innovation in this space. So we've been really trying to bring together, along with technology partners, kind of advancing this agenda of what a common platform might look like, diving into governance, access, operational requirements, and understanding all the complexity there. So basically, I'll stop there, but happy to kind of elaborate as we kind of go through the discussion.
Thanks a lot, Andrew. Now, Naveen, could you please share with us your thoughts or the challenges you've faced?
Thanks, Fabia. And again, pleasure to be part of this discussion, delighted to be here. So to add a different perspective to what Claudine and Andrew had stated quite eloquently in terms of the opportunities in cross-border payments, I would like to talk about one of the initiatives that we've been working very closely that we've recently launched, which is Partior. So Partior is an interbank settlement network based on DLTs. So it is corridor networks, it is MCBDC networks, it is M-bridges. It's the same kind of notion, except that you replace central bank money with commercial bank money. We do think our view of the world is that central bank digital currencies and commercial bank digital currencies will coexist. The two-tier money system will continue going forward as well. And to a large extent, some of the innovation in payment infrastructure has been private sector led. So from that standpoint, what we've done is two of the banks, DBS Bank in Singapore and JP Morgan, we've come together, created this entity. And what this entity does is that it is creating a platform for cross-border, real-time, always-on infrastructure that Andrew referred to. In this particular platform, rather than central banks, it's a JP Morgan which provides liquidity in US dollars. It's a DBS Bank which provides liquidity in Singapore dollars, and so on. Each commercial bank provides liquidity in the respective currencies. We do think that a number of pain points with cross-border payments in terms of cutoffs, in terms of interoperability, sequential nature of payment processing, all of those could be addressed by this infrastructure, even with commercial bank digital currencies. So we have a live transacting platform, which we've stood up. And some of the lessons that we've learned in standing up a platform which is functioning, which is transacting today, were, again, to pick up from where Andrew left, right? Like governance aspects of it. Like how do you determine access? it's easier probably in a commercial bank context, but still there are considerations. Like, how does somebody qualify to become a settlement bank? How do you ensure that you have uniform standards around settlement finality, especially as you go through multiple currencies? How do you think about practical aspects like privacy? I mean, shared networks is great, but when banks come together, whether that is central banks or commercial banks, how do you ensure that you're still adhering to banking secrecy acts and preserving PII? How do you do that in a distributed ledger network? How do you solve for credit? Again, coming from a commercial bank setting, about 20% of cross-border payments are settled on intraday credit. So how do you do credit in a DLT network based on commercial bank digital currencies? So all of these are things that we've solved for. We've learned a lot through the process, and we think that a number of these considerations or a number of these lessons will apply as CBDC's networks start getting real and start getting stood up. Thank you.
Fascinating. Very different perspectives. I would like to pose some questions now, and I also encourage our audience to send them if you have any. So I would like the first question to go to Andrew. Andrew, you were talking about trade. This question is about trade. So regarding the benefits of cross-border CBDCs or cross-border payment systems integration for international trade of goods and services, how do you think innovations can, how can you think innovations such as multi-currency CBDCs contribute to improving international trade?
Yeah, I mean, great question, and kind of just touching on that in a couple minutes. But we do think that multiple CDBC or MCDBC type arrangements do indeed have promise to improve international trade. Obviously, making them faster and cheaper by cutting out intermediaries, but also safer in potentially enhancing kind of the use of central bank money in cross-border settlements. So we think that banks would be able to, given access to a platform such as what we've done on Project Dunbar, would allow banks to transact directly in central bank money across different currencies without necessarily the need of intermediaries and correspondent banks. FX liquidity and rates could potentially improve as a result of collapsing that kind of transaction chain, and it would be easier potentially to exchange foreign currencies with a wider group of participants. Improving the flow of funds itself would significantly improve cross-border trade, we believe. So as I described, to expand kind of maybe on the next level of automation that might be possible, assuming we can accomplish what I've just said, which is still a big if. Trade finance instruments could then further be improved by leveraging kind of the programmable nature of these new DLT networks, right? This notion of smart contracts, in a trade finance use case is tremendously powerful because it's such a sequential and paper-based process today. The more we can automate and leverage the technology, the more friction we can take out of the process, right? So this obviously implies a hell of a lot of integration and specifically, the ability to also ingest and verify data from the outside world onto this platform as well, which is also something that would take a lot of effort to do. And there has to be a lot of rigor around what those data sources are. But if you think about it, maybe try to put an example in place, right, to kind of distill this into something more concrete. If you take a shipment, for example, of temperature-sensitive goods, right, that has to travel across the Pacific or the Atlantic Ocean, that could be medical supplies or food goods. You could have sensors, right, in that container that would be measuring the temperature. And that could then give you kind of a measure of the constant temperature of the goods in that container through the life cycle of that journey. you could have an oracle or some sort of signal from the buyer saying that the goods have been received, a GPS location data, and of course temperature data from the sensors, and all of that could then be onboarded into a program that's running and expecting those inputs in order to release the funds. And that's a very powerful notion that if you can actually get all of these counterparties and provide that kind of level of access and programmability and offer atomic payments and settlements in central bank money, we think that that would really be a dramatic improvement over where we are today. And that's just me kind of inventing a use case, but there's a whole lot of work going into building all levels of that kind of that stack, if you will, in order to realize this potential future. But I'll stop there.
Thanks a lot. Claudine, let's move from trade to investment. So regarding the benefits of cross-border CBDCs for foreign investment, how do you think CBDCs can help attract more foreign investment? Do you think it is appealing to issuers and investors to have a delivery versus payments platform where currency and standardized tokenized assets are exchanged on the same rails?
Well, very, very big and prominent question, Fabia. Well, actually, as I mentioned in the experiments that Banque de France conducted, we covered various use cases like the settlement of tokenized assets, both listed like bonds and shares, and unlisted like commercial paper or fund shares and that type of instruments. Well, from these experiments, if we can draw some lessons, maybe first of all, these experiments confirm that those new DLT technologies and CBDC indeed have the potential to optimize post-trade settlement. First, by reducing the number of intermediaries and by improving their efficiency thanks to reduced reconciliation processes, and also thanks to increased traceability. So this could eventually shorten the trade settlement process, reduce the costs because less capital and liquidity are mobilized. And second, also by increasing the availability of the payment system on a 365, 24 hours, 7 days, thanks to a large distribution of data and increased processing. So in such context, the improvement in the efficiency in post-trade settlement would probably be instrumental to attract foreign investment. For example, regarding the settlement of tokenized financial instruments, both listed and unlisted. For both types of instruments, actually, what we proved is that settlement, we could conduct settlement on a DVP basis, on the same day with the same day settlement instead of 2 days, which is currently the traditional time span in our current setup in Europe, for example. Also, one other aspect regarding specifically CBDC and its attractiveness. It's likely that if central banks do not make a CBDC available, intermediaries would increasingly turn to private settlement assets available on the ledger, like crypto assets, stable coins, other types of assets to settle these the tokenized securities. So this would mean a kind of circumvention of the anchoring role of central bank money in its settlement function. Besides potential regulation issues, this carries counterparty risk, and it could potentially threaten monetary sovereignty and financial stability. Therefore, issuing a CBDC on distributed ledger technology for wholesale payment would appear as a potential solution to these concerns, as a way to make sure that even in tokenized systems, there is a settlement assets which is available to fulfill the 4 pillars of central bank money, which are, first of all, it's a risk-free asset. We ensure service. Secondly, we ensure service continuity by booking on the central bank's accounts. Third, we ensure liquidity. And fourth, we ensure efficiency to settle different sorts of transactions and avoid any liquidity pool. So really by doing so, we would enhance both the security, the efficiency of transaction on DLTs, and we would reinforce the stabilization role of central bank money, and we would contribute to sound post-trade infrastructures in this new context. In Europe, we see it as a further continuation of the post-trade harmonization process to which the Eurosystem has committed in over the last 20 years, with the launch notably of Target 2 and Target 2 securities. So indeed, the use of CBDC to settle these tokenized financial assets would be a major pillar to maintain confidence and to ensure the security of settlement. And maybe a further aspect could be regarding the fact that using the wide use of CBDC would prevent liquidity fragmentation. It would rein in the development of crypto assets which do not present the characteristics of a currency, and avoiding the risk of liquidity fragmentation, having a very wide use of CBDC, as it can be controlled, as we have seen in the experience, it can be really controlled by the central bank using programmability features. It would probably help reduce volatility. And wide use of the CBDC, ensuring confidence as well as control by the central bank, would potentially be a big factor of success to improve pricing in such context. Thank you.
Thanks a lot, Claudine. Naveen, this is for you. Do you see opportunities from a commercial? I'm sure you do. I'd like to know what you see as these opportunities from a commercial standpoint about enabling FX settlements using cross-border CBDC networks.
Yeah, sure, Fabia. One of the key pain points, like as we stood up Partier, right? While one of the use cases we were solving for is cross-border payments, equally, we were solving for efficiencies in FX settlements. We were solving for creating of short-term liquidity markets through intraday swaps, intraday repos. So talking about FX settlements, right? Like, we have CLS themselves talking about the fact that FX settlement risk is on the rise. And that is because there is increasing FX trades happening on currencies not covered by CLS, which is beyond those 18 currencies. So there is a need for alternate settlement venues, which still provide payment versus payment capability. For CLS to add currencies, it's pretty much a long drawn process. And this is where we think that infrastructure like Partier can come in and fill the gap. We can provide payment versus payment capabilities on a number of currencies, ASEAN currencies, globally currencies which are not covered by CLS. And what that means is that we take out settlement risk. We take out FX settlement risk. We estimate that settlement risk is a drag of close to 53 basis points on the balance sheets on a risk-adjusted basis when you look at P&L. I do agree with Claudine that, yes, you take out settlement risk, but you do introduce credit risk because you're settling on commercial bank money. But again, the trade-off here is that you're settling on the books of a JP Morgan or you're settling on the books of a DBS Bank. So these are the number one or number two clearers in all of those respective currencies. So we do think that there is an opportunity to address that gap in terms of FX settlements using infrastructure like this. We also think that even with currencies which are settled by CLS, the delivery of currency itself is T+1, T+2 basis. Infrastructure like this can give you gross settlement capabilities, customizable netting windows, and we are seeing increasingly that's the demand of our clients. So commercially, e-commerce players, for example, they want immediate delivery of currencies. They want it on 24/7 basis. They don't understand the notion of currency holidays. So all of these are areas with Partier, we as commercial banks are looking to address. A very different perspective, but a very commercial perspective in terms of where we think the opportunity lies.
Thank you. I'll follow up with another question for you, I think related to what you've just said. How do you think this a CBDC or a private currency deals with this dependency on financial intermediaries? And do you think, from a CBDC standpoint, do you think we'd be moving away from the dependency on financial intermediaries, such as correspondent banks, but moving closer to the dependency upon centralized big tech providers? Like recent projects, for instance, Intel Online Rock, they rely on Amazon AWS. And how is that on Onyx? And how do you think you should balance the best of both expertise?
Yeah, sure, Javier. And I think there are a few different parts to the question, right? I mean, if you take the first part of the question, to reiterate both what Claudine said and Andrew said, settling, I mean, you have cross-border complexity in payments because of the fact that domestic payment infrastructures don't talk to each other. Every time you need to go cross-border, you rely on correspondent banking. If you were to go away from that and you have the ability to interoperate domestic payment infrastructures, which is what BIS outlined, 3 models, Model 3, corridor networks, you settle on central bank money rather than correspondent banking or private bank money. So if you settle on central bank money, you have the ability to dramatically shorten chains, the value transfer chains. That is what brings efficiencies. So that goes, I mean, I agree with that. That is without a doubt, and that is one of the key foundations in terms of what makes MCBDCs very attractive. Equally, I think that today, I'd like to say that, you know, most of the payments cross-border are done on commercial bank money. For the movement en masse from central bank to commercial bank money, the money supply will have to increase dramatically. So I don't think commercial bank money is going away. I think there will be use cases which central bank money will service. There will be use cases which commercial bank money will service. At least that is our viewpoint. So I think both of them will coexist, serving different use cases. What Claudine said, delivery versus payment, where you don't want credit risk, those are probably the ones which will use a central bank asset. But for other use cases, commercial bank money, as it is used today, will continue to get used in infrastructure like Partier. The second point is about, well, will we increase reliance on big tech providers? And that is where it is very important on how you design the network. Some of the work that we've done with Banque de France and MAS, as part of the corridor network project, which Onyx supported from an infrastructure standpoint, is like you have different hosting models. Banque de France was using a different hosting provider. MAS was using a different hosting provider. If you design the network topology to be completely decentralized, you don't necessarily have the same constraints that centralized infrastructure today has in terms of a central operator, a central infrastructure provider. Even in Partier, which is a live functioning network, you have different infrastructures interacting together in a completely decentralized manner. And you also have the ability to increase reliance of this infrastructure by adding more consensus, by adding more nodes to sort of address some of the failover considerations. So those are a few thoughts in terms of some of the work that we've done. I don't think you will increase reliance on a single providers. The technology allows for unique and novel options in terms of how to get away from that particular risk.
Thanks a lot. Claudine, about liquidity in MCBDCs, what solutions do you envisage for liquidity provision in these platforms? Do the involved countries need to maintain reserves or collaterals in all currencies negotiated in the MCBDC platform?
Well, Fabia, indeed, multi-CBDC platforms are at a very experimental stage for the moment. So far, the experiment that Banque de France has conducted on cross-border transfers involving PVP or DVP, notably the SEBA project with the Central Bank of Tunisia, the MAS project, and the ongoing project EURA and HSBC. Experiments tend to show that cross-border payments can be effected very efficiently using tokenized CBDC, which would be likely to save liquidity for settlement and avoid excess liquidity to be stored in such systems to ensure settlement. However, I think, this might be a personal view, one point of attention would be the risk of liquidity fragmentation, and this is certainly something that we will look at. Creating regional multi-CBDCs might result in needing to build up liquidity pools in various currencies in regional zones. But we have to work further on experimenting with multi-CBDC platforms to draw concrete conclusions and to find the idea would be to find the right balance to increase the efficiency in settlement, and also not to build up too much liquidity, too big liquidity pools in various areas of the world.
Thanks a lot, Claudine. Andrew, continuing with the technical questions, what solutions are envisaged for the unequivocal identification of payers and payees in cross-border payments platforms or MCBDCs and in bridging national payment systems?
Yeah, this is a really complex topic, actually. We did do indeed a bunch of work through the course of last year on digital identity and areas to explore for improvement. And it turns out, as a payments guy, as a central banker, I learned a lot about the tremendous complexity of associated with digital identity, both legal, personal, and corporate, as well as there's a multitude of initiatives in that space, everything from self-sovereign identities on blockchains to OpenID and sort of web-based formats with verifiable credentials and all sorts of great stuff. So very complex space from a technology and standards perspective. I would say that it's behind payments in its evolutionary kind of path to some degree. But obviously digital identity and identity is fundamental to the movement of funds, both domestically and across borders. And there, of course, there's other initiatives like LEI, legal entity identifiers, which have been ongoing for many years and continue to grow in terms of adoption. But it's a complex topic, and I think one that merits further work. We have done a bit more work through what we call Project Nexus, which is not really a CBDC project, but rather more focused on interconnecting instant payment infrastructure. So I know in Brazil, there's been a very successful launch of Pix in the past year or so. And many other countries are now kind of implementing those domestic instant payment systems. And so we've put together a blueprint for what we believe would be a standardized way to interconnect those systems. And obviously that includes aspects of data sharing and digital identity, or at least identity data sharing and APIs that allow for banks and participants in a payment network who still are responsible for performing sanction screening, KYC, AML, and CFT measures, but introducing a level of automation and standardization into that process, we believe is absolutely critical for the future of instant payments systems connections or any future CBDC based platform. Because if you really start to unpack the frictions as they have done at the CPMI and the FSB, probably at least half of the problems associated with cross-border payments, if not more, have nothing to do with settlements and everything to do with really antiquated, regulation in the identity space, and a lack of standardization and ability to automate processes associated with basic stuff like verification. Am I who I say I am? Does my identity map to my account? Can I confirm that this account is associated with the person I'm about to pay? These are it's not really rocket science, but for some reason it's just really not well defined on a global scale, and it's a very surprisingly complex problem in the end. So that's one thing that we've done. I guess Project Nexus, if you're interested, we have published that work under nexus.bisih.org, and we've got quite a lot of technical documentation there as to what we think would be one way forward.
Great, very interesting, thanks. Naveen, how do you see commercial bank issued digital currencies like JP Morgan Coin interoperate with CBDC initiatives? Would large-scale rollout of CBDCs displace initiatives like JP Morgan Coin?
Yeah, I mean, this is a question that we get asked often, right? And obviously, this is a JP Morgan view of things. But again, our view of the world is that the two-tier structure of M0, M1, central bank money, commercial bank money will propagate into the digital currency space as well. We do think that central bank digital currencies and commercial bank digital currencies will coexist. There is this misconception often where it comes from, well, if JP Morgan issues a JPM coin, if Citi introduces a Citi coin, and so on, every bank issues their own coin, aren't you creating interoperability issues and liquidity splintering issues? And our answer to that is, well, that's the world today, right? Like a JP Morgan bank account is JP Morgan money, a Citi bank account is Citi money. And the way you create fungibility or interoperability between the two is through central bank money. This is going to be no different. We think when digital currencies truly become a thing, it is going to follow the same structure. Other commercial banks will follow with their own version of the digital currencies, and central bank digital currencies will be the way you create fungibility between these two. At least that is one view of the world. That is how we see it. And again, the nomenclature of JP Morgan coin gives the impression it's a stable coin. It is not. It is a bank deposit. It is a deposit on blockchain. For us, again, for any bank, like for our institutional clients, things like credit, things like deposit insurance, things like interest, all of that is important, which stablecoins don't provide. And from a bank standpoint, from a treasury standpoint, ability to leverage fractional banking, ability to back a deposit issuance by reserves and by loan portfolio is important. Backing it 100% with reserves and a trust is not exciting for us. So we do think that the only variant of a digital currency which is interesting for commercial banks from a commercial standpoint is a variant of the deposit construct, and that is what JPM coin is. And we think going forward it will interoperate with CBDCs for very different use cases.
Nice, thanks a lot. Claudine, what do you think should be the role of the central bank in all this endeavor to promote more efficient cross-border payment systems? Do we have to authorize, regulate, supervise, and resolve cross-border CBDC arrangements for the digital currencies that we issue? Or besides, should we provide rails and infrastructure, liquidity management, and transaction settlement?
Well, probably central banks would have a lot to do. Well, it's true that in the field of payments, central banks currently play different roles as operators of payment systems, usually RTGS systems, also as overseers of FMIs, contributing also to payments regulations, and thirdly as catalysts for innovation. And this is, I think, a prominent role. Well, regarding cross-border arrangements, which are characterized by high costs and long processing chains, well, central banks should aim to encourage competition, to foster efficiency, and to lower cost. However, safety and trust in money are also key. And I feel that CBDCs in this respect have an avenue for improving cross-border payments, as the CBDCs would provide settlement in the safest assets, guaranteed by the central banks in a digital form. Central banks could also provide, if need be, and if there is a case for this, infrastructures or platforms on which CBDCs could circulate and be exchanged. So we are quite keen here with Banque de France to explore some further experiments on multi-CBDC platforms to test the feasibility, to test the efficiency of the use of such platforms to settle multi-CBDCs in a tokenized way. So I think that central banks need to be very much present in this field, and to not only to accompany innovation, but also to spearhead innovation in this respect. Thank you.
Fascinating, thanks. Andrew, how different is the design of a domestic CBDC and a cross-border CBDC? What does cross-border aspect of the CBDC have to compromise? Should they be designed with emphasis on each target case?
Yeah, that's a good question, and it's a tough one. I mean, first of all, I guess domestic CBDCs are certainly the purview of each sovereign and each nation to decide exactly what the requirements and use cases and ultimately what design and implementation any given country would choose to take there. So it seemed likely that domestic CBDCs will follow the path of a traditional payment system, in that they're typically designed for domestic use cases, and as a result of that, they're not necessarily built to be interoperable, right? That's one of the fundamental challenges that we're actually facing with our Project Nexus work, is that even though these instant payment systems are new within the past 10 years, they're largely not meant to be exposed across borders. So there's a lot of potential for retail CBDCs to be similarly siloed, frankly. So for a cross-border CBDC, I mean, I think again we're firmly of the opinion that we want to enable sovereign countries to issue wholesale CBDC onto some type of platform, whether it's a regional platform or a global platform, come together to leverage the benefits of the technology, and we've talked about some of those benefits earlier on this call. We have, I think Naveen mentioned that the BIS paper that people do frequently reference now, that came out last year, kind of explaining the three different models that are primarily in contention for cross-border payments and CBDCs in particular. And so we've really focused largely on Model 2 and Model 3 in the work of the Innovation Hub to date. But again, our view is that central bank digital currencies and wholesale central bank digital currencies, especially for cross-border, should be certainly issued on some sort of interoperable platform, and then really we have to solve for the governance and the operations of those networks, and the access to those networks. So what does it mean to have a foreign bank all of a sudden giving access essentially to central bank reserves in a different country? How do you manage KYC and anti-money laundering for foreign banks who are not necessarily under the supervision of a specific issuer in that network? And then, of course, how do we transact across borders with different rules? There's jurisdictional boundaries that may apply, currency controls, etc., that might need to be regulated. And so there's a certain amount of control and technical controls that we can build into the platform and the standards. But I'm kind of rambling, but hopefully I'm answering your question in some form. And at the end of the day, a payments network really can't be, at the end, opinionated, and it should be fairly generic in terms of the interfaces, right? So that a whole bunch of innovation and we talked about trade finance earlier, could happen on top of that, and be able to interface and interact with the value added services that I think would really bring all of this potential to life.
Thanks a lot. Very useful for us. Now we'll go to the final round of questions. We have just a few minutes left, so let's, if you could please be brief on your answers. Claudine, that's for you. It's following up on Andrew's answer. Would FMI prudential principles apply to MCBDCs? Are those and FAFT recommendations are designed after thought, or should guide the design early on?
Well, yes, it's. I think we need to maybe to think well ahead and project ourselves into the future. Regarding the platforms where multi CBDCs could circulate and potentially be exchanged, yes, there would probably be a kind of infrastructure. Well, if such platforms indeed provide services in a way that they can be assimilated to payment systems, well, then it is likely that they would need to be framed under the PFMIs, and especially if there would be like systemic FMIs. So this is a question that would need to be examined, and at a very early stage, because aspects such as governance mentioned by Andrew are necessarily very important topics. But okay, well, I think these aspects still need to be explored, and that we really need to explore further the experimentations of these multi CBDC platforms to draw some conclusions. So happily, we have not finished our work in this area. Thank you.
Thanks a lot. Naveen, which corridors would you see as ideal for the launch of cross-border CBDC initiatives?
So there will be quite a few, right? But one of the key regions we are working in is the ASEAN region. And the reasons why it is CBDCs or MCBDC networks are ideal is A, because the regional trade amongst these countries is so high. B, a lot of these currency pairs are not very liquid currency pairs. So which means that they cross through US dollars, which naturally means that payment chains are extended. So if you have these sort of corridors where there is a lot of trade, where the currency pairs are not necessarily liquid, that is where corridor networks, MCBDC networks come into their own. ASEAN is one region, but there could be many other regions.
Thanks. Andrew, final question. Would there be a chance for a global stablecoin issued by the IMF or the BIS to simplify pairwise forex pricing?
Come on. I obviously can't speak for the IMF or frankly even the BIS on this one, but on a personal level, I kind of do doubt that a single global settlement asset like a digital SDR is likely to emerge. That again, like that, a global stable coin like that would need to be issued onto a global platform, and then if you're going to build the platform, then why wouldn't you then work on enabling the controls that would allow individual CBDCs to be issued on the same platform, and then you can take advantage of the technology and all the capabilities that would allow for a more efficient FX swap and an FX trade to happen. So to me that it's definitely it's worth exploring how to make FX settlements more efficient, given the premise that there is a potential to introduce a better platform and a better technology stack first, before you leap to the conclusion that you need a composite currency or some sort of global stablecoin. My personal views.
Thanks. Well, thank you all very much, our panelists, It was a very fascinating discussion, very enriching for us here in Brazil. We have a lot to think about from what you've told us and taught us. So we have reached the end of our 6th webinar. Thank you very much to all our panelists and to our audience. We'll close up with a few words in Portuguese. Agradecemos aos palestrantes por compartilharem conosco suas percepções.
We thank you, the participants, for having you here. Pay attention to the next webinars. I say thank you to you all, and I wish you a good day. Thank you very much.
Thank you.
Bye.
Thanks,
Thank you. Bye.